Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Wednesday, October 23rd, 2024. It was a very interesting day again. The market obviously broke out of its sideways pattern, broke out of this just three waves after three waves patterns, and dropped basically all the way down to support, and was a little bit surprising because if you remember yesterday, I think I was talking about how the markets were actually going to get down that far and still be set up for what I was seeing on the seasonal charts, and that we're going into a period where the markets should just begin to rally pretty strongly, and that rally should take us basically through the month of November and into the first couple of weeks of December as we run through our year-end posturing, position changes, etc. And then again through next week's earnings reports. Now, today, Tesla did report, and Tesla right now is up $18 from where it closed. So it's trading at 231, almost 232. And the market, of course, reacted because the futures markets are still opened. And so we have pretty much added to the recovery that we did off of today's lows. Now, let's just kind of go over that on the hourly chart. And let's see if I can just get this guy to shrink up and go down. We'll let it be. Anyway, so what I believe we did today is we finished the minute wave 4. And that's both the S&P and the NASDAQ. Let me go out to the 4-hour chart and show you that what we had still 1, 2, 3, 4. Wave 4 does overlap wave 1, which is going to take me back to that, see that diagonal. We're here in the NASDAQ. It is fitting that it is a diagonal, and that now I have put in our wave 5 projections. And this first one, because remember, the minor degree, which is what we're looking for, minor wave 5, are in the orange, and the next level that we're looking for in minute wave 5 are in the white. And the first one being 0.618 is kind of hiding behind there, but I'm going to say it's kind of between 21,665 and 21,719, probably up towards that upper end. Let me just do one thing, bring this down, and then see if I can't separate it. I can always put it back and we can get it directly. And boy, this is a tough one. So it's 21,719 is 0.618. So it's pretty much right up against that 1.882 for the minor wave 5. Now those are the low end. Let me say that's the low end for our minor 5. And then what we have above that, here we have 100% at 22,736. Now that first one, 618, it would definitely put us in a new high, because remember that high that I'm looking for us to break is for the wave 3, the minor 3, and that's 21,213. So once we get above that, we're going to be looking for structure. We're going to look for the structure to finish. And if we have 1 or 2, or we have 3, or if we have all of them next week, really kind of coming in line or better, and have a little bit of a decent forward guidance, I think that we could get up to that 22,736. Or even up to the 1.618, which is right above all of that. Now, yep, we'll be going past our, these are intermediate, I believe. And for some reason, they're kind of stuck out there. Let me just go out because I want the all to be together. And let me just go out here. And so what's this one? That's the 5. And this one, let me just check this to make sure I got my colors correct. And I do not. So I thought so. So let me just change that real quick so that the intermediate are where they should be. I mean, they are where they should be, but the color-wise. where they should be. So going back out to that 4-hour. And so we have where intermediate wave 2 would be 5.882% of intermediate wave 1. Now, granted, intermediate wave 3 is much larger than that intermediate wave 1, as it should be, but 1 and 2 at an intermediate degree were a little bit on the small side as we started this whole rally phase off of the 2022 lows. So that would be the first one, 21,665. We have our 618 for minor 5. So that's our first target. This one I'm leaving there because it probably is going to provide some support, resistance, and we're looking for it to go higher. But I'm thinking we might get some resistance within this 5. And so I'm just going to leave it there. I do not think that's where it's going to finish, but I'm just kind of leave it there for right now. So I think our first line of an area of a small cluster where minor wave 5 and intermediate wave 3 could complete is 21,665 to 21,719. That second window, a little bit larger, is sitting right here. And that's 22,736 to 23,030 to 23,336, 337. That's our upper target where we get the 100%, where wave 5 would be equal to wave 1, pretty common. And I am expecting it to spike up and out of this triangle. Not that it should, but I am expecting it, and then that would be finishing, and then it's going to come back down. Now, if not, and I've got to run this as a 1, 2, 3 here, 1, 2, and the 3. Depending on how high it got, it could get a little sticky. But right now, I'm still okay. I'm still okay with the count. I'm still okay with what we saw today. That really came in. It fit beautifully. It actually did fit beautifully. If I just kind of reinstate that, those resistance lines, or excuse me, support lines that I put in, there was 100%, 20,102. It got down to 20,079. So well within the plus or minus that you could look for. So came down, hit that support, did not even, I thought, well, we had a shot that it could start to challenge, but it stopped. It started to rally up and off. Then it held, the market closed, and then we got Tesla's earnings, and then we just added. And I think that liftoff is exactly what we're going to look for the completion point of 4, the start of wave 5, and everything kind of fell into place. So I labeled it as such. And we kind of do have a clean 1, 2, 3. I think I'd have to go back out of the hourly and go down. But there is a 3, a 4, and a 5 coming down into here. Doesn't look like it because it was a straight shot. Now, here's the other point that I really want to cover today, that we might be wondering why. Why could the market really drop so hard? And there wasn't any real news. There wasn't anything really kind of sticking out that would have told us that was what was going to happen. Now, first thing I want to do, I'm going to go to the NQ. Before we even came in today, the market had already gone through, from what I can tell, 20,565, 20,465, and right there we had a large gamma position at 20,565. We had the largest gamma position, so large gamma 1 at 20,465. At that same level, we hit the call wall. We had the call wall. The call wall got broken. So once that happened, we started to really come undone, so to speak. Then just 10 points below that call wall, we had 20,455 was the volatility trigger. And we came down and we broke the 0 gamma level. Which is combining how they arrive at that level. The model is that it's combining the gamma at the strikes and for the Qs against the NDX, translating it into a line for the NQ. And so that line was 20,344. That broke, boom, we started to slide even more. And then we started to really hit the skids. And then we came down 20,165 we broke that, and then we slid all the way down. So it was a break after break after break after break, and as this occurs, it throws off. We've had a long period of time where they built up this risk on trade. And so as these levels break, it's like getting out of that trade. Now, what do I anticipate for my minute wave 5? I'm thinking that as we start to go back above, which we will likely, maybe tomorrow, or we'll see the adjustment made for that volatility trigger, if it's going to come in at the same level, or has it been shifted lower, that I believe that what we'll start to see is on a continued rally, we will start to see the market and that volatility trigger get triggered again, but this is to the upside. And so when it does, then we're starting to see the risk on trade put back on. So, and that I think will help to propel us. So the other fact that I want to kind of bring into the conversation is, as that risk trade is going on, as traders and institutions and whoever is utilizing that strategy, then what we see is that the market doesn't seem to catch a pullback, right? We're going up, we're going up, we're going up. It's very steady. The market doesn't pull back, and when it does, it's shallow. It's the same thing for when it gets triggered and it's risk off. We're getting positioned, sold, 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 sold. And the pressure is to the sell side. And any bounce, any pullback off of that is very small, and the selling resumes. And so that's how we know we're in a situation where it's shifting from being a positive gamma to shifting to be a negative gamma. More on that when we get over to the S&P. But again, it's when we start to break these upper levels that are marked, the call wall, the volatility trigger. That's one that's very important. And now the volatility trigger likely is going to be reset, but it's going to be above the market. So once it's broken, that's a signal. We're okay. Go back into the trade. And we'll see volatility being sold. We'll see that they're going into the underlying and they're going to resume. Now, again, first thing this morning, what did we see? We saw them pile back in another day into Microsoft. Now, I don't know exactly who or how that particular trade, but it's the same strikes. It's the 225s. Excuse me, is it 225? No, it's the 425s. The 425s, the 430, the 435s. It's a butterfly. It's from what I see. Looks like they're putting on a butterfly, or at least a couple of vertical spreads. So collectively, though, it has produced tremendous volume in the options. It has produced a lot of where dealers have to hedge, because there's this pull. They're buying the calls, selling puts, and the dealers, instead of being massively long, are going to be, massively short, because they're selling the calls and having to buy the puts. So therefore, they have to buy. They buy the stock. And the stock really traded up again today above, I know it was above 430, and I guess even higher. I'm not sure exactly. I could go back and check real quick, to be honest with you. Let me just go take a look and see what was Microsoft's high today. 431. So yeah, I know what had gone above there. So this really was perfect. It is exactly getting it done. And breaking those levels is what helped push this to its conclusion, push that low. Now, can I declare that low is in and we're all done? Not quite yet. If I break it, I see that's the hourly chart. You basically can start to count 5 up, but even if I come in here on my 15-minute chart, now I can see it. 1, 2, but it's like 1, 2, 3, 4. We get another 5, and that's going to be the 3, and then we get a 4 and a 5. So right now, while I could look like 5, 3 is the shortest. So I believe I might work it out. And if that's the case, we got 1, 2, 3, 4, 5, and then we're done. But I don't believe so. I think we're still sitting inside the third. So, but it's very productive. Don't get me wrong. It's a nice liftoff. And so I am going to be looking forward to finish. We get another little pullback and we come back. But If it gets left here and we just start tumbling down overnight and we come back below 20,190, let's say, it's going to kind of leave this as a three-wave pattern up. So be corrective within it, and we have one more low to do. And that would just be taking us below that 20,079 number. But the next support level we have on a fib basis is the 1.618 for the wave C, and that comes in at 19,809. Could we have one more day of just like a shove and a push? Yeah, we could. But right now, I'm labeling it as complete, and let's see what they want to do. Again, there is the break point that, nope, we're being left with 3. That's basically 20,190. We start breaking below that level, and I think we're going to break that level, and we're going to head all the way back down. And to be honest with you, well, I'll likely be able to throw a 1, and then down here, as if this is a 1, a 2, 3 of C, 4 of C, and we're putting in a 5 of C, I will be able to put a fib there. Right now, I don't feel it's necessary because I'm looking for them to continue to go higher and finish putting in the initial 5 waves up for minuet wave 1 of minute wave 5. All right, so what did we see? Well, we saw all the moving averages. That's the 15-minute chart. Let me go out, at least to the 4-hour chart, open it up again. We saw that we had all of the moving averages really reacting. As I thought, the 200 on the 4-hour did turn a little bit, but flat. The 50 went down a little bit, but likely will go flat because we started to head up. The 20, look, stopping its strong slide, may go flat, as in if we keep rising, then it'll turn. And so will the 8. So we expected them to break. And the 8 just broke there, and the 8 broke the 50, but it would be the 20 breaking the 50 that would give us that additional hard shove. And it didn't happen. So I'm feeling pretty good about the ABC right now. I'm putting the 4 there and looking for that rally to continue. So, and the minor wave 5 to continue. Let's go over to the ES. And in the ES, same kind of a deal. 4-hour chart, we had that marked yesterday. Same deal, minute 1, 2, and then I rearranged my labeling for that minute wave 3. Got 1, 2, 3, 4, 5. We came off here as well. Let me drop it down to the hourly chart and kind of pull that open a little bit. There is the top of 3, and here we have an A, a B, and a C. Now here again, this I left up because I wanted to show you that the 618 is where it came down to. And it came down to 5801. Remember I was talking yesterday that it, more importantly, in terms of the 5800 level, when I was talking about it, was pertaining to the SPX. But I thought in the futures market, if they could keep the market above 5,800, psychologically, that would be very important for the pickup of the rally, to reinstituting the rally. But here as well, we saw a lot of levels break before we even started this morning. So in the ES, we had the largest gamma position at 59.41. So that call wall and the large gamma still sits above the market, because from where we started today, we were already getting ready to get under 5,900. So on the way back up, the call wall, I'll see how it adjusts tomorrow, but the call wall is going to be above all of this. Possibly. We'll see how it all plays out after today's trade. Now, so where did we start to break? We had the volatility trigger at 58.86. So we can measure that out. We can see there is 58.94, 58.90, 58.85. So it started to break here. We got a little pullback, and then it just started to get tagged. So that was the volatility trigger at 58.86. At 58.66, right here, the put wall got broken. And you see the reaction? Boom. All the way down. So put wall, what happens? Why is it the put wall? Why is that support? Because there's a bunch of short puts sitting there. So when that gets broken, what happens to those in that position? Being short the put there, being short a lot of gamma there. Their position is they're getting longer. As it drops, they get longer and longer and longer until they make adjustments or get out of the position. So we saw adjustments all the way down. And then we saw the 5,800 level hold. Now, in the SPX, the 5,800 level, I believe, did get broken. And that was exactly, it was a large gamma position was sitting there, but it was also important for the SPX. And I'm just going to double check myself. Yeah, it did get broken. So pretty much, I think on the opening, it got broken because 57.62 is the low in the SPX. So breaking that just really brought in additional selling because the options on the SPX are very, very heavily traded. That is, in my opinion, where, excuse the phrase, but that's where the big boys go to play. So because they can get the volume they need, they can get the number of contracts they need, they can pin it and they push it just how they would like it. And the rest of us kind of live with it. But to me, the SPX, the cash market, has always been Big Daddy, so to speak. And when we talk about that in the ES, it's $50 a point. In the S&P, because it's the S&P 500, I believe in the old days it was $500. So it's just the way that the index is constructed, and it's big. So the zero DTE options trade very heavily there. And even intraday, because larger position holders may want to, they'll hedge what they have through zero DTE, and then they might pin it and then get out, or get out of the position and then see what happens after. All kinds of things, but bottom line is SPX broke there, but I believe that it did end up closing back above. Let me just double check. It almost did. It closed at 57.97. And I believe that now, with the additional move that we had, that it might just cruise up through 5,800 again. Now, does that reestablish the level? It does. It does. And I want to see again here as well where the volatility trigger will be for tomorrow morning or the overnight trade even, because a lot of what we got broken happened overnight. By the time we got in this morning, we knew that the SPX was going to gap simply because of what it had broken. And while a lot of those traders had opportunities to trade, if you're institutional, you just had your order sitting around the globe and you likely made some adjustments to the position. But in terms of the options trading, boy, that didn't start until we were able to get in here this morning. Now, same type of deal. And what I failed to do there, as I did on the others, first I'm going to take this off, but I want to make sure I could show you. It was beautiful. I believe that same deal. We can do a 1, 2, 3, 4, 5 down to here. I put the C, minute wave 4. So I'm going to take that off. And now I'm going to go back out. I'm just going to go here real quick. And because I need to go inside, that's the wrong size. Let's see, I can do it here. I can. So unfortunately, because it's now much, much different, this is going to be interesting as to how high we think this minute wave 5 can get. So I'm going to go there and I'm going to go right up to there. All right, so go back down to that hourly chart so we can take a look. Our first marker is going to be 59.50. Now, what is the high that we need to get above here in this future? We already are. So it's going to have to get above where we've marked wave 3. And that is 59.27. 59.50 definitely does. So we'll be looking for structure because it's not the most common. The most common Wave 5 to wave 1 is 100%. And guess where we are? Boom. 6,042. Remember yesterday I was talking about it? We know what's up in that area. The JP Morgan, the call side of that collar sits up in that area. I believe it is 60-40, maybe 60-45, but it's up in that area. And my feeling has always been that they have until the end of December, right? That's how long they got to hold that position. They take it to the end of December. Doesn't mean they can't make adjustments, but they'll do that in zero DTEs, I believe. Or they'll move this. You'll see them move it up. Well, actually, we won't see it because they are so stealth and they're such good traders. They just do it. Or what we may see eventually, because just the size will show up, some adjustments or whatever, but that is where the collar is sitting. And again, depends on how long it's going to take us to get up there. So, because again, we are finishing a minute wave 5, which is going to finish the minor wave 5, which is going to finish the intermediate wave 3. Now, let's open up this and see what our other levels are telling us. We still, as far as the intermediate goes, we have 62.41. That's intermediate wave 3. So what else do we have going on? Well, we have this level, and I can change this now since it's going to be in the minute. And I'm just going to change this to put it in that same color so that we see what we're dealing with. And I will include the 2.618 because we have this additional number. If we just get this blow off coming into the end of the year, again, same thing. When I look at our seasonal charts, it is suggesting that we're going to have a fairly strong upside taking place in the month of November. Well, we got this week, next week, and then we're into November by the end of next week. So, yep, we could be starting. And this was a great point to finish and start to look ahead. Now, remember, 1 up, 2 down correction, 3 up, 4 down correction, 5 up. It's not going to happen overnight. This one did, but I'm not looking for this minute 5 to just unfold. We have minute wave 3. Let me go back to my 4-hour chart, and you can see wave 3. Wave 3 actually was from the August 7th low up to the high in October 17th. So it was fairly 2 months. 2 months takes us, right, into November, December. So interesting. We might just meet it head on, and we really, 618 may just be a pause. And then we push and we get up to 100%, most common. Second most common is 1.618. That puts us in the territory for this guy. And also minor wave 5, 1.618 we've gone through already. So now we have 2.618 at 62.76. Could it? Sure, it definitely could. If we have excellent earnings reports and now a big shuffle going in, what are we keeping, what are we not keeping for 2025 as a year end, right? Positioning, posturing, whatever you want to call it, that takes place. All of these levels are a possibility. But just to be clear, on the minute wave 5, this is the third most common. But if the structure comes in and it fits, in other words, we do a quick little 5 up and we turn off of that and turn hard, then, yep, we're going to be forced to put the 5, and the 3. Because remember, we've already gone past 1.618. We've already gone past 2.618 in terms of the intermediate degree. So again, everything reverts back to structure. If the structure is clean, then that's what we're going to be looking for. We're looking for the completion point. And so we have our levels. And we have our levels for the others should it push beyond. But right now, I have to tell you, this is where I'm rallying around. This one right here, 60.42. In that area, 60.50, 60.25, all in that same area right there. Let's see how it all plays out. Let me go back up one and let's take a look at the daily. for our moving averages. The 20, went flat because the market got up and closed back above it. So it has the room now to turn. And look at even the 8. That was a pretty strong downturn today. The 8 just said, yeah, we acknowledge. But the daily was telling you, nah, not really. And here we have the 50 untouched, still angling higher, still angling higher. So I like it. I think we're set up pretty cleanly to pick up the rally and go higher. So minute wave 5 turning into minute wave 5, minute wave 4 turning into minute wave 5. All right, so let's take a quick look to see what we have, if anything, coming up tomorrow in terms of economic data. On Thursday, we have initial jobless claims, and then again, we have the S&P Flash, U.S. services and U.S. manufacturing PMIs. So jobless claims at 8:30, the Flash PMIs at 9:45 a.m. Eastern, and then new home sales at 10 a.m. Eastern. That's our numbers for tomorrow. All right, everybody have a great evening, and the next daily update will be on Thursday, October the 24th.